Hello all. Today we're going to look into Bullish Harami Candlestick pattern. This is the series of candlestick pattern course I am designing. So today we're going to look into Bullish Harami Candlestick pattern. This is the key reversal signal in the technical analysis. So let's jump into it. Introduction. So candlestick patterns show market sentiments widely used in technical analysis, and bullish Harami is a reversal pattern. Indicates shift from bearish to bullish trend. So what is a bullish Harami candlestick pattern? So this is a two candle pattern. So you see here at the bottom. So here is the bearish downtrend is going on, and at the end there is a two candle. One is a bearish candle and bullish candle, and this particular bullish candle is inside the body of the downward bearish trend bearish candle, and after this particular candle the upward movement starts. So it's a two candle pattern, appears in a downtrend, single possible uptrend reversal. And this Harami is a Japanese word. It means by pregnant. So structure of the pattern. So now I just pulled this one from the actual chart. So the structure of the pattern: first candle, large bearish red, which is this particular candle, and second candle is small bullish neutral, this one. So here we don't have to consider the wicks. So the body, whole body, open and close, it's inside the bearish candle. Second candle is inside the first candle body, and here is the downtrend, and after this one the bullish trend started. So this is the reversal. Market psychology. So in the downtrend, when there is a strong selling pressure, the momentum slows down here. So basically here the downtrend is going on, and after this, even like a so big bearish candle, the next day there is a small bullish candle actually. And when we see the momentum slowdowns, so the basically the volume on this particular day is greater than the next candle. So basically here the volume is more, and in this particular green candle the volume is low, so the momentum slows down there. So buyers begin to step in, and because of that the price jumps actually it from this bottom. Here the buyers are stronger, and this is the potential reversal begin, but on only these two candle we cannot rely. But this is the first signal. We can say that yeah, there may be reversal coming up. So key characteristics. So this is a downtrend going on. After the downtrend, this particular reversal can happen. This is the signal of that one. So small candle equals to indecision. So we need the bigger candle. So this is also not as big as it, but it's good enough. It's above from the low of the previous day. So volume wise, lower volume possible. So if we see on this particular red candle, the volume, how big is the volume, whereas on the next day the volume is low. So basically here the selling pressure was more, because of that the volume was more, so a lot of sellers was selling here. On the next day, even it's not below this particular low of this particular candle, even the volume is low. The candle actually it's a green candle, so there are like less sellers are there and more buyers are there. So that's the reason the sellers are like stop selling pressure was reduced and the buying pressure increase. So this is the momentum slowdown here. But based on these two things only, we cannot rely whether we should think that okay, now the trend is change or what. So we need some another confirmation also for that one. So confirmation, bullish candle after the pattern. So here this is that same red candle, and then there is a next subsequent day we have the green candle which is inside that particular uh, previous day red candle. Now this is the first thing signal that okay, the pattern is changing. But to get the confirmation, whatever the high of this particular red candle, if the price goes above, then only we can say the confirmation. It's second confirmation, and along with that one we need some volume also, volume confirmation and some another indicator. So one of the confirmation is that the price should close the subsequent candle above this particular resistance of this red candle. So and also volume increase and add strength for that one. When this particular candle, the subsequent candle breaks the resistance of the selling candle, volume should also increase same time. Trading strategy. So once the price closes above this particular resistance level, then we should say, think that the direction is changed and uh, is the confirmation that we can enter into the now upward trend. But if the price reverses and goes below the support of this selling candle, then it should be stop loss and we should get out of that particular position. So these are the two trading strategy. After the confirmation, get into the position and write that position. If it's come down to the support, below support, then take the stop loss and get out of that positions. So this is the it's easy to identify this particular thing. An early reversal signal we get here. This is the confirmation, and you should not go with only these two things. So this is the MACD indicator along with this particular trend confirmation. So here the MACD also is above, so it's we can say that now the trend is changing and it's time to get into the upward trend in that particular stock. So yeah, same thing as earlier mentioned earlier, not reliable alone. So we have to see the some another indicator also. False signal can possible. So unless and until you don't have the confirmation, it's not good to enter into the position. Same thing, you can use the RSI or MACD. Look for support zones as mentioned earlier. Check for the volume and avoid choppy market. So in the choppy market, there is a chances you can end up into the false breakout or like a false confirmation also. So it's better to avoid the choppy market. Example is already given explained. So this is first thing to identify whether it's the bullish Harami pattern. Then we need the confirmation. Once we have the confirmation on the resistance level, then the second thing is volume and also along with that on RSI or MACD indicator. So spot pattern. So pattern spotted, then wait for the confirmation. Yeah, once you have the confirmation about this one, you can get and also manage the risk. So if you see something reversal or something, yeah, you should get out of the position. Yeah. Summary is a single possible reversal pattern. Confirmation improves accuracy best with other tools. So these are the things. So here if you want to spot that particular pattern, let's see if we can. Yeah, so here if we can see, so here is the big candle and this particular is inside. If it's a more, if this particular bullish candle is bigger than the, it's a good too. That's good for this particular pattern. So this is the first thing. Then we have to wait for the resistance of this one. Okay, and also the MACD pattern. So in this case risk reward is 1 to 2 only, but in some cases risk to reward is higher actually. So if we, yeah, so here in this particular pattern if you see, here you can this is the first thing to identify the pattern. Then above this particular confirmation on this big green candle and the MACD, yeah, so here risk to reward is really good one actually. So this is all about the bullish Harami pattern. If you have any question, please type into the comment below. Thanks.